We've dusted off the spreadsheets and just put out our first note for the year. It's a bit of a refresher on where the economy's at, if you're still a bit hazy after the holiday break. And it also updates how we're seeing some of the key sectors in the economy this year. 5 key points for you very briefly. The first, on the global economy. News is coming in thick and fast, continuing to surprise and frankly unsettle. The important point though is that it hasn't yet materially altered or upset pricing in financial markets, in contrast to some of those episodes we saw last year. So it's still a watching brief for now, albeit a pretty nervous one. And the second point, and probably the most important one, is that the New Zealand eco numbers we're seeing roll in this year continue to point to an economy moving into gear, and maybe at a slightly faster pace than what our forecasts had allowed for. We already had pretty decent growth numbers forecast for this year, about 2.5%. And now the important thing for me is that it looks like growth or the signs of life in the New Zealand economy are starting to broaden out, both across sectors and across regions. Third, the labour market is stabilising or maybe just tightening up a little bit. Tends to support our view that the unemployment rate probably peaked back in the third quarter of last year. We're seeing some signs that firms have restarted hiring, but we still think it's probably the second half of this year before that demand for labour is such that it starts to pull the unemployment rate down. Fourth, the housing market. We just tabbed down our forecasts for house prices this year such that they're expected to rise just 2% over the year. Now, we've been making the point for a while that the housing market looks to be in a broad state of balance. And with home building activity starting to pick up again, we think that state of balance will probably carry on for a little bit longer. And finally, interest rates. Now, in theory, 2026 is shaping up as a year of relative stability on the interest rate front. No change in either direction is expected for some time, but the improvement we've seen in the EcoPulse so far this year does raise the risk of that first rate hike coming a little bit earlier than our current forecast, which is February 2027. Still a long way off. Mortgage rates generally moved up a little at the end of last year, but I think we'll see a bit of consolidation from here with that slow trend towards longer term fixes continuing. For more information on any of this stuff, please see my note on the BNZ website.